Okay guys, Saturday the 2nd of December, and once again we are starting on the S&P 500. So we'll have a quick look at this market from last week in relation to our Sunday analysis. We'll then move on to looking at the market for the trading week ahead, and then we'll move on to the NASDAQ. So the video is coming out a little bit later this week just because I was setting everything up so that I can now make these videos on my PC rather than the laptop. So I had to get all of the software downloaded and installed. So from last week, I have kept on the sloping support and resistance lines, and I have also placed two of our key zones back onto the chart. What we're looking for was the sloping support line right here. If we've seen the market pulling back toward the lower half of this zone, we could look for potential bullish positions. We were also looking for a break out of this zone before we looked for pullback and then bullish continuation. What we were going over was how we wanted to see a break above the 6,000 level and before we looked for that bullish bounce. Now what you can see is the market has made a pretty huge bullish rally last week. It's on the back of the tax reform that is going on in America at present. Now what we can see is if we drop down onto the 4-hour time frame, you can see the market. So really on Sunday, this candle started to break up above this zone. But for me, I don't really pay too much attention to these Sunday candles. So coming into the start of last week, you can see the market breaking up, then pulling back to retest. You can actually see there's a pin bar on the 4-hour time frame. It's just testing at our level of support. This is our key level that we went over last week. And what you can also see is if we just take the previous price action right here, it's breaking up, it's coming back to test at our key support level. It's also testing at previous structure. Lovely bullish sign. And then we get that strong bullish continuation coming into the S&P. We actually broke right up above the sloping resistance line, made a small pullback, and then once again, further continuation. On Friday, you can see the market has made a very, very strong bearish movement all the way back down, but it has once again rallied all the way back up with the bulls stepping back in. So coming into next week now, what are we looking at? Let's just make this a little bit bigger. Okay, so first thing is the zones down here remain key now. We've already had the breakout, we've had the very strong bullish movement. It's just confirming that this is a key level of potential support and resistance. Okay, so with us being up toward the all-time highs, once again, we don't have a lot of evidence. So we're once again relying on things like round numbers. So 2650, we've actually already had the market coming up and rejecting off of this level. Now it's really all the way up into 2660. However, for me on the S&P, that's a little bit too big of a zone. So what we're going to do is we're going to go back onto the 4-hour time frame. Just going to have a little bit of a look, see if we can get some clues. So really it's up toward 2650, down into around about 2648. There's also a level sitting down below around about 2645, down toward 2643. You can actually bring this just down a little bit lower to take into account the spike up from Friday. So we have a level of potential resistance. We have another one sitting right here. Now the market is currently looking very bullish. We want to be a little bit careful of selling into it at present. We want to get some nice clear evidence that the bears are stepping in before we start once again looking for potential weakness. We've made a very, very strong rally. And we don't know how the market is going to react, especially with that tax reform being passed late into Friday. So we don't really know how the market's going to react over the weekend. We just want to be a little bit careful. We have a level of resistance here, level of resistance here, and then we're looking up toward that around about 2660 level, which is the spike up from Thursday. We don't have any other evidence up here. Just worthwhile keeping this on your chart as potential resistance moving forward. Now really what we want to look at are the pullback levels. So very strong break up. We've broken out of this sloping support line. want to start taking into account areas where we can look for those pullbacks. So right here, around about 2,620 up to around about 2,623. If we see the market coming back next week, especially if it's lining up once again with that sloping, what is now potentially support, we could look for the bulls stepping in and bullish continuation. Now just down below there, the level of price action right here, really we can take this all the way up from about 2,630 up to 2,635 right here. So both of these areas, if we see the market pulling back, it's worthwhile looking for bullish bounces. And really those are the main areas that I really want to be keeping on my radar going into next week. We do have the resistance up above. It has been holding up there for quite some time, so it's still worthwhile looking for that weakness. If we get the clear signs, we can look for those potential sell positions. But at present, just because the market is looking so bullish, preference is to watch at area 1 right here, area 2 right here. If we did see the market coming all the way back down to retest at this previous level of structure, it is still key, lining up with that 2,600 level up above there. We also now have around about 2603.5 up into 2607 right here. We're just using that evidence of previous levels of structure, previous areas where the market has paused at these price levels, and we have then pulled out, tested before we had the bounce. We paused at this level. You can actually see on Friday when we had this very strong bearish movement, it hit at the previous level of structure and then shot back up once again. So we want to keep these on our radar also. Okay guys, so that is everything for the S&P for this week. Let's move on to the NASDAQ. Okay guys, so for the NASDAQ, let's do the exact same thing. So what I've done is from last week, I have put our key levels back onto this chart, including the sloping support and resistance area. Now up in toward this sloping resistance, what we went over last week was that although the market had made a nice strong bullish movement, whilst below this level, we could look for potential resistance. It was only if we started to break up above this sloping resistance area that we could then look for the pullbacks and the potential bullish continuation. Now what you can see is coming into Monday, Tuesday, and then on Wednesday with that huge move down, we're rejecting up at these levels, lining up with the sloping resistance line. What we also went over was how we could look for pullbacks into this level of structure for potential bullish bounces, 1 and 2. If we started to break down below this level, we could look for resistance and the move down. If we started to look below break below this level, we could look for resistance and the move down toward this area here. Now what you can see is that actually all came on Wednesday. Very strong move down. However, we then seen the pullback on Thursday, right up into that level of resistance. And once again, we've seen the rejection coming into the NASDAQ. Okay, so coming into this week, what are we looking at? Well, really, our zones are remaining relatively similar. So what I'm going to do is having a quick look at this chart. This one here, obviously we can just move up to take into account the all-time highs that were created last week. So right here, so we've got around about 6,425 to 6,410. 6,394 to 6,3 around about 85 remains the same. 6,378 down towards 6,370, again that remains the same. We can look for potential rejection at this level, potential rejection at this level, and rejection at this level. Now if we are breaking up above any of them also, they are also good to look for potential support and bounces really up into the zones up above. So if we break up above this one, I'd be happy to look for the move up to the next zone. If we break up above this one, I'd be happy to look for a bounce higher, really up toward at least sort of 6,403 and potentially back up toward those all-time highs. Now this zone down below right here at 6,332 to 6,353, what I'm going to do is once again, we're going to drop down onto the 4-hour time frame and just have a little bit of look at what we've done last week and then what we've done a couple of weeks ago, and find our levels of support and resistance that way. The reason we're doing this is we have now given a little bit of price action up here, which is giving us some clues, but there's not quite enough to do it on the daily time frame. Now what you can see is the market pressing up, rejecting at this level at 370. First thing we can see is that really we could bring this level down from 6378 down toward around about 6360. Right here. Now down below there, obviously we have a key level at 6320. Really down toward 6304. So really the round number is 6,300. Worthwhile watching for potential bullish continuation. If we see the market pulling back again, we can look for those bullish bounces and back up toward these highs really. And then if we start to break up above this level, again, we'd be looking for that previous structure, breaks up, pulling back to retest at these levels would be a good sign to look for once again bullish bounces on this market. Now down below this zone right here, we do have another one that's worthwhile going into, one right here around about 6290 down toward 6278. Again, nice level of support. And then down below there, really, we're taking the clue off of this very strong spike down on Friday. I'd really bring it up into 6258, down towards 6242. Really, we have the spike down here that we could keep on our radar also. But for me, this zone really ends at around about 6243. So those are the main areas of support down below. We have 6243, 6260, 6278, 6290, 6300, 6320. At all of these levels, I'd be happy to look for the bulls stepping in once again. Up above, we still have that key level of resistance. As I've mentioned, if we start to break up above it, look for the pullbacks, potential bullish continuation once again. We have a level of resistance up here, and then we are back toward the all-time highs. Right here. All-time highs, as we've been going over the last few weeks, always worthwhile looking for weakness also. Okay guys, so that is everything for this week. As always, I hope you found that helpful. I hope you all have a great trading week next week. I'm James Orr, and thank you.